my people, us, Black folks, we do not invest in life insurance. Hi guys, welcome back to a HR tips video. This video will be discussing medical insurance. It is open enrollment season, so your employer is probably pushing you to make your elections for 2020 benefits. And I wanted to kind of just get on here and kind of show you the difference between the typical HMO and a PPO plan, things that you need to consider when choosing your benefits. I'm not going to go down and give you definitions of each one. I feel like, Google is very good for that. You can definitely do that. I want to speak more to the things that matter when I'm looking for insurance. Cost, and if I'm going to get the best coverage for my needs. So most employers will give you an HMO or a PPO plan. And the basic difference between the two, HMO plan pretty much is like a network of doctors, and you have to have a primary care physician. So you have one doctor that you are assigned to that you can go to all the time. In order for you to see a specialist like a dermatologist or something like that, you would have to see your doctor and get a referral to see another doctor. So he's like the gatekeeper, so you don't go off and see a gang of doctors. Therefore, you're not building up cost for the insurance company. So you're just limited to that one doctor. However, I highly suggest HMO plan, by the way. A lot of people look at it as the poor man insurance, and it's definitely not. When I was living in California, I had an HMO plan. I loved it. And the thing about new technology is that most of these providers now have some kind of online portal that you can kind of just email and back and forth and just say, hey, I'm experiencing some kind of breakout. I want to see a dermatologist. Can you refer me? And instead of going into the doctor and having to see them and having to pay a copay, which I'll get into that, what a copay is and all that stuff later, he can just easily put the referral in for you to see someone within the network. So you're not as restricted as you were before back in the day with all the technology and just having access to kind of talk to your doctor through email and text message. So that's why I highly, highly consider an HMO plan if you are relatively very healthy, you don't really go to the doctor that often, you are content with seeing one person, and you're not trying to switch up doctors all the time. HMO plan is the way to go. It's usually a cheaper method. You don't have to hit a deductible. You literally pay your premiums and you pay a copay. You do have an out-of-pocket maximum if you are doing some extensive type of surgeries or services or anything like that, compared to a PPO plan. PPO plan is, I want to say it's a little bit more of the bougie plan. You have more flexibility on a PPO plan. It is a little bit more costly, of course, and you have the flexibility to see any doctor. So if you're like, oh, I want to go see a dermatologist, you just find a dermatologist that obviously you want to find someone that's within the network that takes your insurance because it'll be more cost effective, and you can see one. You want to see a therapist, you want to see whatever, you can just up and go by yourself, which is great. There's no gatekeeper limiting you to seeing different type of doctors. However, with a PPO plan, you do have to hit a deductible. So my biggest thing is, if you are going to be going on a PPO plan, you definitely want to look at what the deductible is. Some insurances have a very high deductible plan, which pretty much means you have to pay that amount before your insurance even kicks in. So say your monthly premiums are like, $150 a month that you're paying into. Some employers are even more. Maybe you have your kids, your husband. You could pay almost $500 a month for your premium. And I know probably you think that's super expensive, you should really see how much the employer is paying on the other side. That is my perspective. Before I started doing benefits, I signing up for benefits, and I would say like, this is so expensive. Like, this has to be crappy insurance. But now I'm on the other side. That is a fraction. Okay, you're paying just a fraction of what your employer is paying for you. So just think about that as well. Sorry, got off track. So you are paying your premiums, and then on top of that, $500 a month for your entire family, you have to hit a deductible of maybe like $2,000. So every time you go to the doctor, you have to keep paying until you hit $2,000 for your insurance to then kick in, unless you're just going to the doctor for preventative care, like your annual checkup. Those you just pay a copay, and that's pretty much like a fee you pay every time you go to the doctor. So that is the basic difference between the two. And I mean, depending on your needs, I would highly suggest an HMO plan. It's very cost effective. It's very flexible. If you have a good relationship with your primary care physician, you can kind of just go back and forth within a portal, email, text message, things like that, to kind of speed up the process for you to see a specialty type of doctor. The second thing that I want to touch on is a FSA account versus a HSA account. So FSA is a flexible spending account, and it's named flexible, but I don't really feel like it's that flexible. So pretty much it is governed by the IRS, where they set a limit every single year. So for 2020, it's going to be $2,750 that you can contribute pre-tax dollars for health-related things or items. So you can put money, pre-tax dollars from your check that goes straight into this account. You can use it to pay your deductible, your co-insurance, your copay. You can also use it at the pharmacy for your prescriptions, or even like regular items like Band-Aids and ointments and things like that as well. If you go on the website that I will leave here, you can see the list of things that you can actually purchase. I actually contributed to my FSA, and I paid a portion towards that for my breast reduction surgery that I had earlier this year. I will be contributing to for next year because I would like to get laser eye surgery. I have been wearing glasses since I've been in second grade and contacts since I was 16, and I am completely over it. So I just want to fix my vision, and I am going to take that money and put towards the cost of that, so I don't have to come out of pocket because my vision insurance doesn't cover LASIK surgery. So it is great for you to use towards health related type of things that you'll be having throughout the year. However, if you do not use it, you lose the money. So you have to plan out your expenses. So if you know, I'm having surgery this year, or I anticipate, the kids getting sick, or this amount of times that on average we go to the doctor. If you want to put money aside, do that, but do not max out the account. If you don't use it by the end of the year, you're going to lose the money. They also have a dependent care flexible spending account where you can contribute up to $5,000 to use towards daycare expenses. That's also great as well. They give you a debit card that you can use depending on the provider. They may take it. If not, you can just pay out of pocket and then reimburse yourself. They also have a parking and transit FSA as well. If you take, if you live in a tri-state area, a metro type of area, and you are buying train passes and bus passes and stuff like that, and you want to get pre-tax dollars to pay for those things, you can do that as well. Or if you work in a building that you have to pay for your own parking, you can also use that funds for that. So there's a lot of things out there that a lot of people don't know, that just to save some money over time. The other account I want to talk about is a HSA, which is a health savings account. This pretty much is similar to a FSA, but it actually is way more flexible. Similarity is pretty much pre-tax dollars that you are able to put in an account to use to offset costs with medical expenses. So you can use it for your deductible, copay, co-insurance, if you need to buy eyeglasses, if you need to buy braces, if you need to buy a wheelchair, whatever the case is, you can use these funds for any medical type of service or item that you need to buy. The great thing about this is that you own the account. So if you leave your current employer, you can take those funds with you somewhere else, which is great. I believe it also has a lot of investment benefits as well. And I will leave that information down below because I am not very well versed in that area of the account, just being honest. All right, guys, let's touch on life insurance, okay? So this one is very important because listen, I'm just going to be very transparent. My people, us, Black folks, we do not invest in life insurance. What do? Something happens, someone passes away, and we start a GoFundMe. We have to do better. We have to think for the future. Pretty much, life is not forever. We are going to pass away one day. Of course, we would like to think it's when we're old and gray and we're 90, 95, 100 years old, but life happens, things happen, and people pass away every single day, and you have to plan for that. If you have responsibilities, if you have children, if you have a spouse, please plan for that. You definitely don't want to leave them with all the mess of figuring out your bills, and bills still need to get paid. Mortgage needs to get paid. Like, just because you pass away, that doesn't go away. So I definitely want to encourage you to look into life insurance and really see what is the best plan for you. Now, your employer, typically, if you have a good employer and you work for a decent company, they offer a group life insurance plan for their employees. And typically that is maybe 1 to 2 times your salary. They will give that to your beneficiary. So whoever you decide to put, spouse, kids, parents, whoever, in the case something happens to you, you pass away. Now, let's say you make $70,000 a year and you're like, you know what, that's not enough. I think I want to invest a little bit more. You do have the option to pay more into the plan additionally so you can have a higher life insurance policy. Now, this is great and ideal to do through your employer if you are older and if you are unhealthy, I would say. If you decide to get a life insurance plan outside your employer, which I currently actually do have, I have a policy totally separate from my job. And it was easy and affordable because 1, my husband and I are relatively still very young, and 2, we don't have a medical history of any diseases or illnesses or anything like that. If you are older, of course, they say you're older, so you're more prone to die quicker because you're older. So taking out a life insurance policy on your grandmother is going to be hundreds of dollars compared to me, which mine is probably like $25 a month. Taking out a life insurance plan on someone who has cancer rather than someone who is cancer-free is totally more money. So going through your employer, if you're older and you have some sort of sickness, may be beneficial to you because typically, not all the time, but typically they don't require a medical examination or record. They just allow you to pay the additional amount and you don't have to do the extensive background check that goes along with applying for an insurance, life insurance policy. So I really encourage you guys to really think about your future, the afterlife, you know what I mean? While we up in heaven partying it up, you know what I mean? I just want to make sure everybody down here is good. So get your life insurance policy together, guys. If you decide not to do it through your employer for whatever reason, go ahead and figure out ways to do it outside. And I have a really good friend that is a godly man that does sell life insurance. So if you are interested, please let me know. I'll actually just leave his information down below, his website, his contact information. Tell him that I sent you, all the things. Okay, now back to the employer part of the video. Now, if you currently don't have insurance through an employer, or you're not on a government-based type of insurance plan, which you should be, but if you're not, I definitely want to give you another option. Virtual doctors are a huge thing nowadays. There are tons of apps on the market. One that I have used myself is called Live Health, and it is by Anthem Blue Cross, if I'm not mistaken. And it is simple, straightforward. You download the app on your phone, you fill out your information, and you FaceTime pretty much with a doctor. This would be for basic type of things. I use it for my son. He is 20 months and he had a pink eye. I didn't want to go all the way to the doctor's office, so I used the app. Basically put the phone in his face, showed the doctor, and she said, okay. She prescribed him a eye drop. She put the prescription straight into the one that I put on file, and I was able to pick it up within the hour. Simple, straightforward, and because I have insurance, my visit was only $10. But if you do not have insurance, it's only $49 flat fee to see a doctor through the app. Of course, you can't break an arm and use this app. You obviously will need to go to the emergency room. But for small little things like an ear infection or a sinus infection or pink eye, you know, that you need some sort of antibiotic or some kind of ointment or prescription, you can definitely use these types of apps in order to get care right away. Of course, with that, if you don't have insurance, I can't tell you how much the drugs will be at the pharmacy. Of course, it will be a little bit more money than if you did have insurance, but it's just an option for you to think about if that's a lot more cost effective than actually going into a doctor's office. So that's just the basics of employer benefits 101. If there are any questions that you do have, leave them down below. I will be sure to go through the comments and answer them as much as possible. And if it's a lot of comments, maybe I'll do a part 2 to this, because I know it's very intensive. It's a little difficult to really understand, but benefits are something that you pay into, and I definitely think that it's something that you should really be knowledgeable of what you're paying into and what you are getting. So again, leave it down below, subscribe, thumbs up the video. Love you guys. See you on the next one. Bye. When I get you back, oh yeah, I promise you'll never leave me when it comes to you and me.